Welcome everybody to the, I don't even know what it is, 15th honorary Multifamily Masters, Texas Multifamily Masters meetup. For those of you that have never attended this, hopefully you guys will continue to attend to see more of these, right? So once COVID kicked off, we run a chapter here in Houston, and John and our partners kind of run one in Dallas. And really, with COVID, everybody went virtual. So we figured, hey, instead of everybody kind of reinventing the wheel, we decided to combine forces. So we put together the Texas Multifamily one. It's been very successful, right? We're usually averaging about 100 people. And, that's what you're here at today. So, as part of our goal is really to bring good quality speakers. We're excited to kind of have both a friend and a speaker, right? And it really, adds tremendous value. I feel like it's one of those things that does not get enough attention, and it's just completely, much more impactful than it is. And I'll share a story. We have a property that really DJ and his team took out of the flood zone, right? That we were paying, I think, $25,000 of, premium for that flood insurance policy, right? Well, now the next buyer doesn't have to pay that, right? Whenever you do that, it's straight on your NOI, right? Do the math, $25,000. Let's say you divide it over 6 cap. That's $416,000 of value that was created, right? Very powerful thing.
So that's off your head.
Yeah,
tell me,
no way. You guys not doing it in your head as well? It's just right here. So, but anyways, that's really the power of what we're talking about today. So with that said, before we have DJ kind of kick it off, I want to go ahead and introduce myself and then hand it over to Ben and the rest of our partners. My name is Ferris. I have a company called Disrupt Equity with a partner, Ben. He's the bald guy. I'm the guy that's not the bald. We buy properties throughout Texas, right? And Georgia, those are our main 2 markets. We're vertically integrated. We have our own management company. And, we're constantly looking for partners, looking for deals and opportunities. So if you guys have anything, feel free to reach out to us. We try to make ourselves available. With that said, I will hand it over to Ben.
All right, everybody. Well, once again, thank you for joining us. We got a good crowd tonight. As Ferris mentioned, the other partner in Disrupt Equity, we buy and sell apartment complexes. We also have a management company called Disrupt Management, as well as some other businesses and partnerships that we do. We bought and sold over 2,500 units, over, close to probably $150 million in assets under management currently. And, ultimately we do this to add value to people. So we like to bring on good speakers. It doesn't always have to be us up here talking, right? You guys have to learn. It's a part of the business and industry that you're constantly learning new niches and ways to increase value and ultimately to provide those returns to your investors. And the DJ is somebody that we met a couple years ago through a partnership that we have on the insurance side, and he's been invaluable. So we felt like, hey, let's get this guy on. But before we kick it off, DJ, let me introduce Mr. Anton Matley. Then we'll go to John and Ronnie, and then I don't know if Neil Bertrand is on as well, but he would be our 4th partner on the Texas MFM as well.
Yeah, thanks, Ben. Hi, everyone. Anton Matley, co-founder and CEO of Peak Financing. We help investors with that side for commercial real estate with a strong focus on multifamily. We help a lot of syndicators with the debt financing for the deals. And since that makes up typically 70 to 80% of the purchase price, it's always a pretty important piece of the puzzle. So if you have any deal, happy to talk with you guys about it. I'm also together with John and Ronnie and Neil Bertrand, co-host for the Multifamily Masters in the Dallas area. And so with that, I'm handing over to, let's see, Sean is not muted, so it's Sean first.
All right, thanks, Anton. Yeah, John Montero. Thanks everyone for joining us tonight. Looking forward to hearing and learning a lot from DJ. I'm based here in Frisco in the Dallas-Fort Worth area. Been here since 2009, full-time multifamily developer and owner of 5,400 units, all in Texas. We primarily focus on the Texas Triangle, DFW, San Antonio, and Houston. Partner with a lot of different co-GPs and work very closely with family office, preferred equity, private equity, as well as other accredited investors on all of our projects. So good to be here and look forward to an education in that flood piece. Is Ronnie on?
Yep, I'm here. So thanks everyone for joining. I'm Ronnie Phillips with the Kingley Group. We're a real estate private equity firm based in Dallas, Texas. We focus on Class A and B multifamily across the Sun Belt region. Currently done 572 units across Texas and Georgia, a full cycle on one. And happy to be here. Feel free to reach out if y'all have any questions.
All right. With that said, I think we got everybody. So thank you all very much. With that said, I know everyone's not here for us as much as we all love talking to you all. You know, we're all here for DJ, right? And DJ, not only is he here virtually, he actually happens to be in the same city. So, you know, happened to kind of coincide with him being in Houston. So welcome, DJ, to kind of our online meetup. And, you know, excited to have you on, right? Like I said at the beginning, I think what your company does is so powerful, right? And it's almost undervalued in some ways. And I know Ben's going to hate me, you know, don't charge us more, DJ, please. But I mean, it's a very, very powerful thing. And so, you know, we thought it'd be very valuable to kind of come on and have you speak to the audience. And, you know, there's a lot of people that are also going to watch the recording, so you'll have that as well. But really to educate people on, you know, what to think about whenever they see flood, right? What things are concerning, what things aren't concerning, and what can be done, right? And what things people should walk away from. And to give you a real example, I mean, we walked away from a deal last week, you know, a deal that really was attractive here in Houston, but it had some flood things that we knew, you know, your team couldn't work around, right? Versus other situations where maybe it's not as concerning. So, you know, welcome, DJ. I'll let you kind of take the floor.
Thanks, guys. Appreciate you all having me on. It's good to see some familiar names as well in the crowd. In multifamily world is definitely a small community, and it's, you know, it's nice to continue building relationships with everyone. Again, my name is DJ McClure. I'm the Director of Business Development for National Flood Experts. We're an engineering company based in Tampa. And so we work with investors and real estate property around the country that are located in flood zones. And so just to give a real quick kind of background on our company, our owner, Brad Hubbard, he's our original engineer. And he'll tell you the funny story is that he got tired of working with engineers. And during the 2008, you know, kind of fall, he actually worked in the insurance world himself. And then he figured out there was a bridge between the two worlds, the engineering and the flood insurance. And there was a lot of solutions there that were being underserved. And that's kind of the birth of our company. And so our company was started 7 years ago, you know, with the purpose and intention of helping property holders find cost savings and add value to their properties. And we do work in all the different vertical markets of real estate around the country, but, you know, naturally multifamily is an area of real estate where this particular problem and solution is very impactful. And, you know, like Ferris alluded to, some of these value add plays can be extremely impactful. You know, we've had situations where it's added millions. You know, you're talking hundreds of thousands of flood insurance that we were able to help reduce on a single asset. You know, where you took something that was completely upside down and made it a more healthy asset almost overnight. And so what we do is we look at real estate a little bit uniquely, right? So we have a variety of expertises all into one, and we're looking at the property from a variety of angles. If we can possibly change the flood zone or find another cost solution that's going to help reduce that flood insurance policy that you have in place. So let me back up for a second and let's talk about, you know, kind of the problem and how this arises. You know, for a lot of investors that may not know what happens when you look at a property in a flood zone. So there's a federal law in place that if a property is located in a special flood hazard area, which is what basically people call the 100-year floodplain, the mortgage company, you know, the mortgage originator, they are bound to pass down the flood insurance requirement to the buyer. And so depending on the type of loan that you're getting, you know, a bridge loan perhaps, or just something of the sort, may just have like a basic NFIP max type requirement, meaning you have to get 500,000 in coverage on each building that is flagged inside the flood zone. And there's no way of getting around that. If you want to close the loan, you're going to have to suffice that requirement. And depending on certain factors that go into the equation of the flood insurance premium, can be quite expensive. And then if you are in perhaps an agency debt type scenario, or maybe you're refinancing and you're working with Fannie Mae or Freddie Mac, those flood insurance requirements can be really extensive. They want the full building value, full building replacement covered. In many cases, they want 12 months of business income also, covered on the flood insurance. And just to give you a live example, I've been here in Houston for meetings the last 2 days, and we had a client they were supposed to close on a deal today, and yesterday, 24 hours before the closing, they found out they needed $9 million in additional flood insurance coverage because the corner of the flood zone touches the building. And these guys are just sitting there with their arms in the air. They got quotes, and it was in the hundreds of thousands that they needed to come out of pocket with. And so fortunately, we've worked with this group before, and so they were able to go to their lender and say, hey, look, we got a group that's going to look at this. Can you give us an extension? So they've at least given us a window to work on this, because you just can't get those kinds of, quotes and policies overnight. So in any case, this problem also has a solution. And that's what a lot of people aren't necessarily aware of, and that the flood zones can be changed. And so most people just kind of take it at face value because the federal mandates in place. You buy the flood insurance, and then you just build it into your financial performance for however long you plan to hold the asset. And then naturally, like other insurances, it increases, somewhere between 9 and 20% every year. And most people just say that it is what it is. But realistically, what we do is go to a finer level of detail than what the flood map has at the surface. And we go to FEMA and provide an engineering analysis saying, actually, these buildings can be excluded. We can get them from an AE zone, for example, into an X zone. And what happens is that FEMA issues a letter of map amendment, a LOMA, you'll also hear it referred as. And it's a very powerful document. And so as Ferris alluded, not only does it remove the flood insurance requirements for you currently, but it also transfers automatically when you sell the asset. Or if you go to refinance in year 3, because that's just part of the plan, you don't have to worry about the agency Freddie Fannie scenario coming into play and giving you new flood insurance requirements. And I see that scenario all the time. And because people didn't know about it, they didn't plan for it, it comes as a huge surprise. And a lot of times, when you're initially buying the asset, that can, kind of tear into the loan proceeds, or it can, dig into some of that refinance cash out that you're working on as well. And so what we do is then once we go to FEMA and once we have the letter, we kind of work with our clients to kind of facilitate these other steps. And what needs to be done to go and give this to the bank so the mandate's removed? How do we go to your insurance broker and then help facilitate whatever changes it is? Because once you have the buildings in an X zone, not only is the mandate removed, but you're free to get the flood insurance however you'd like. And so naturally, in areas like Houston, other flood prone areas around the country, it's wise to keep a flood policy in some areas. And so at that point, you're getting the X zone pricing, which for most buildings is going to be the cheapest policy available for that particular asset. Let me give myself just a quick breather for a second, and let me see if there's any questions. Just kind of to this point.
Just to kind of kick it off, I know everybody's probably waiting to pop their questions in, but just to kind of stimulate some dialogue here. So we know this, but I'm doing this for the benefit of everybody else, right? Can you explain the different flood zones and what do those mean? You said X, AE, what is all that stuff, right? That'll be my first question. Then I'll pop you with another one.
That's a great question. So the flood zones are categorized into V, A, and X categories. So V being your coastal flood zones where there's wave action. Think of like Galveston, or Barrier Islands. They're just totally exposed to the ocean. Excuse me. Those types of areas, they're more severe risk of a flood zone. And so those particular areas, they tend to have much higher premiums as a result. You get into the A type categories. This is when you think of a flood zone, this is your more standard 100-year flood zone. So an AE flood zone, what you see the most commonly. There's been a flood study done on that area. there has been a particular base flood elevation. Let's say it's 10 feet. They say that above 10 feet is where you're going to start to see flooding in certain areas. And then within the A category, you've got a few other types that just have to do with, whether the flooding is going to be from ponding, from water kind of, gushing or moving toward the property. But then once you get outside of the 100-year flood zone, now you're talking about an X zone. And an X zone has no lender requirements for any flood insurance. But additionally, for such like John developers, if you're building in an X zone versus building in an AE zone, it's totally different permitting requirements. And so as we work in some instances where there may be a raw land scenario where we can actually help steer them in the right direction, so that way the land can be moved into an X zone to facilitate making that development process a little bit easier. That's one that's not as commonly talked about.
Do you guys do the engineering side of things though? When it is raw land, like, hey, you put the detention on this side of the land and that type of stuff, or is it you guys are just strictly working on, the FEMA portion and getting it into the correct flood zone?
Yeah, so we tend to just consult. Most developers, tend to have their own civils on staff that they've done, multiple projects with. So when they're doing their grading plans, detention pond design, all those things, we're not necessarily getting involved in the physical portion of that. But what we are doing is consulting. And so we'll review the grading plans and make sure that, the proposed grade adjustments are going to be where we would need them to then confidently be able to go to FEMA and have the flood zone changed. But then the other thing too is when we're consulting with developers, we're not just talking about the flood zone, we're talking about the long-term implications of how they're building the structure and what that looks like from a flood insurance perspective. Like this building that I was referencing earlier, the developer happened to do a particular design change with the garage, and that could create, quite a bit of flood insurance cost for them down the road. Just because that one particular area of the building is so much lower than the rest.
Okay, so let's take a scenario of you've gotten somebody out of flood zone AE into flood zone X, right? So they don't technically need flood insurance, but maybe it flooded in the past, and they just, for the comfort of the deal and to sleep better at night, how much is that typically? There's a per building cost there, correct?
Correct.
Okay.
So,
what does that typically run?
For the flood insurance itself?
Yes.
So an average flood zone price, in an AE zone, you're seeing something in the ballpark between, maybe 1,500 to, 3,000-4,000 on something that's not so severe. And then in an X zone currently, you're looking at about 750 a building.
Okay.
So it can be quite a difference.
Okay. And then I know we had Mr. John came in with one other question here. When is the best time to engage your firm? Before the PSA, or when do you typically, talk with most of your clients?
When a new asset's being looked at, and you feel pretty confident that you're going to put the LOI in place and move into the deal, move into due diligence, that's typically the best time to at least get us involved so we can start looking at some of the documentation that's available. I have a lot of investors around the country that if they're looking at deals, they'll just simply email me an address and say, hey, what do you know about this area? And, I can give you some quick high-level details, especially in markets like Houston, where we've done, lots and lots of projects. I may have looked at the property before. I may have done a project on the same street. But the earlier in the process, the better, because once you go under contract, you typically have 45 to 60 days to closing. And that's generally plenty of time for us if we have a solution to get all of that confirmed prior to closing.
Okay.
Yeah. So maybe on that same vein really quickly, right? So people don't waste your time. I mean, what is the process, right? How much effort is it for you to give high level guidance versus, if the person is buying the deal or they're about to buy the deal, right? How much effort is that for your team? And is there anything else later, right? Just so people can understand, because sometimes the ballpark might be, hey, yeah, send them to me and it takes me 5 minutes, boom, 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 right? Versus, oh no, anytime you do that, it takes me 15 hours of work to go get you, a definitive answer.
Sure, that's a great question. No, we all try to be respectful of each other's time and always appreciate that. Something high level, that's probably only a couple minutes. I can quickly look up, pull some quick details on the area, and shoot you back a couple quick notes. Like, that's not a very time intensive task. If we're going to do the full engineering review on the property, at that point, we'd like to have, let's say it's a current asset. It doesn't have to be a new purchase. We'd like to look at the current flood policy declaration pages. That has quite a bit of information for us. We want to look at the elevation certificates if you have them. That has another huge set of information that's important. And then some type of site map or survey, because really a lot of the solutions here are in the details. Sometimes we're talking 1/10 of a foot, sometimes even less. And that can be the difference between something qualifying and not for different solutions we're looking for. So that type of review, we're going to send that into our engineers. They're going to go through the full scope. That's a more time intensive process, but that's what we're doing all the time, is reviewing, hundreds of properties a month, looking for solutions to help the investor.
Cool, man. Well, hey, we don't want to steal your thunder. If you had some more, we'll let you keep going. I'm sure there's going to be more questions coming along.
Sure. So, thinking about this, when you really look at the life cycle of the asset, just bringing flood into the conversation is something that I think just gets overlooked in general. And, so now as people start to learn and say, okay, you know what, flood can be, there's a value add play here. Now that you kind of know that there is that potential to go in, and the previous seller was paying 30, 40, 50,000, and there's a potential on the front end to reduce that. There's a bit of creative research that can go into as you guys are looking at new deals. And because I think a lot of people tell me that I don't look at flood zones, I don't even want to think about buying in a flood zone, I stay away from flood zones. And depending on the research that you've done, like, there's areas that haven't particularly been flood prone historically, and like Harvey is kind of a fluke example in some ways, because they force flooded areas that probably wouldn't normally flood in a typical storm. And so we've still been able to help a lot of those clients. And so we've gotten them into X zones, we've still gotten them some cost savings, but because of the history, they still kept flood policies. But looking around the country, there's tons and tons of properties that we're able to do this for. I mean, we look at hundreds of properties a month, and we find a solution on over 50% of them. Just to give you an idea of how common this can be. And if your average multifamily property, let's say, has 20 buildings and something more garden style, chances are we're going to find something on at least a portion of the buildings. And sometimes it can be a hybrid solution, because we've been talking a lot about changing the flood zone, but honestly, that's not possible in every property. And so that's where the flood insurance expertise of our team comes into the equation, because once we rule out that we can't change the flood zone, we start moving into all these other scenarios. And so with the way that the FEMA NFIP flood insurance is structured currently, there's lots of scenarios that once we start dissecting the engineering information, we qualify solutions that can create some pretty substantial refunds. Just to give you more of a unicorn type scenario, but we had a client last year, they were paying a little over $200,000 a year for flood insurance, because they had been placed into a more severe category. Their policies continued to increase 20% every year. So it had more than doubled in the 5 years that they've had the policy. And so we were able to put a particular scenario in place. It was quite unique, not common to all properties. And it took their policies from about 20,000 a building down to 4. Now, not only did they get a refund back to the ticket of about 180,000 for year one, but they also got a retroactive refund. So in that particular case, they got a refund back for some of the previous years that they'd even owned the property. So it's a pretty substantial type solution for that particular property. And again, that's not common, but that's some of the different things that can be found when you start really just dissecting all the information that goes in, to these flood insurance policies. And you're probably thinking, well, I have a great insurance broker. He really digs into the flood, and we work with agents all around the country, and they all do a fantastic job. So the difference with what we're doing with our review is we're dissecting all the data from an engineering perspective. And then we're working with them, as part of their team. We're shoulder to shoulder. We're not doing anything against them necessarily, to supplement what they've already put in place and then create additional savings. And so in scenarios like the one I just described, we work with your agent to give this engineering, data and exhibits straight to the flood insurance carrier. And then once the underwriter reviews all the information, they would issue new declaration pages with the new policy premium. They would then send you a flood, no pun intended, of checks coming your way for the refund. And then those cost savings then carry forward with you for the subsequent years. And so that's one of the biggest values of this as well, is that, you might think this is kind of similar. Okay, I've had a tax guy come in and negotiate, my property taxes or, similar services. But the difference is that those are only one-time impacts, whereas any solution that we put in place carries forward. And so when you're looking at the life cycle, then you can really start to formulate in, okay, we've got some bonus equity here that we didn't even account for. And if I'm an investor on one of your deals, I'd be pretty excited about that.
No, and I would say
related to that, sorry, go ahead, Ben.
No, you go ahead, man.
I was going to say, related to that, DJ, I mean, what does your pricing look like, right, for someone to kind of get in the sense of, is your firm is it $100,000? Is it $50,000? Is it, less? I mean, what should someone kind of have in mind for that?
It's a value-based pricing structure that we use. And so if we're doing a flood zone removal type project, we're just charging 1 year's flood insurance. It's a one-time cost for each building that we can get FEMA to approve. And so then after that is approved, you can either cancel your policies or you can change them to an X zone. So you've got a refund coming back that offsets that cost. So in a lot of cases that pays for itself. The second scenario is, more of the consulting style that I was just describing, where we look at the policy, we go to the carrier and they issue a refund. Most projects, it's just a 1 year refund. That's, 99% of the time. And so in that case, we're just charging whatever refund we're able to get the carrier to release. And so it's a one-time payment for us. And then again, the investor sees all the savings going forward. Best part about that is that all of our projects are done on a contingency. So we don't invoice the client anything if we're not successful.
So when it comes to property taxes, you guys are similar in that respect, right? But sure. I think you brought up one point that I wanted to really just drive home for people that are listening in, right? This is forever, right? Now if it floods again, things could change again, who knows, right? But my point is that you have that LOMA in hand, and when you go to sell that property, right, you're no longer in a flood zone. You don't have to market it as a flood zone. That actually in itself, is probably going to drive the buyer pool for that asset too, right? I mean, we don't shy away from that type of stuff just because we understand it and we know how to work with DJ and our insurance agent as well. But, for a lot of people, they shy away from deals that have flooded because they perceive it as being risky, right? Whenever you take that risk away by the services that you provide in itself, that could drive value, right? Beyond the, let's take $50,000 and cap it out, and that's how much value you're driving just right off the bat. That unintended value driver at the backside when you sell the property is pretty big too, because you're just going to have more people that are going to be chasing it. So, I think that's important for people to understand is that LOMA, when you have that, that's set in stone now. Whereas, like you said, the property tax, you're going to have to go back to that guy every year to try to fight that for you. So,
yeah, the LOMA document, it's valid for the life of the flood map. And, the flood maps don't change very often. In most areas, they're 10 to 15 years before you see the next update come through. And so chances are you're going to have already exhausted your life cycle and moved on to the next deal by the time you would see a flood map change. But that's part of the research our team does, and transparency is a large part of our company core values. So if there's information that we see that is going to have some type of impact down the road on the property, we'll let you know that. That's we want to share all the information so that you're well prepared for any scenario that comes down the road. And so then I'd like to give you all an update that's coming from the FEMA side. So they are making some updates to their flood insurance program that'll be taking effect possibly later this year, and then affecting some policy renewals as well next year. So no surprise, FEMA and the NFIP, National Flood Insurance Program, has been losing money for a long time. They've been operating in a deficit for a number of years. You always hear, Congress will say we approved a new spending for FEMA. They've extended the flood insurance program, and so what they're doing is they are changing their rating system, calling it their risk rating 2.0, and they're going to be taking some new factors into the scenario with how they do some of the ratings, and they're saying this is going to take effect October 1st. But from things I'm hearing, it doesn't seem like they have quite all their T's crossed yet. So it's kind of yet to be seen if it still comes out in October. But any current assets that you own and have flood policies, this won't take effect until April of next year. But it's just good to know that this is coming down the pipe, because this could change a little bit of the landscape of flood insurance going forward. And it'll definitely be something to be aware of if you are looking at properties in flood zones. After October, they're going to be using a little more geolocation, type details that they're going to be factoring into that end price. So naturally, if an area's had more historic flooding, or seems to be in an area that they, from an actuarial standpoint, consider to be more risk, then there may be a more high base price that you're starting at if it's a brand new policy. And so an important detail to understand is that when you buy a property, flood insurance is one of the few insurances that you can assume from the prior seller. Meaning that if they have, let's say they have an NFIP policy in place and it's midterm, then all they would do is literally transfer the ownership of that policy from them to you. And the reason this is important to understand is that if they have a particular discount that's already in place, let's say they already have X zone pricing, or they have a particular discount in place, for an AE zone that they're in. When you assume that policy, they transfer that straight to you, and so you're able to maintain their price point without having to start fresh from a brand new policy. And after October, that's going to be really important. And then looking into next year for existing flood policies, they're saying that there could be increases as much as 18% in a large part of the country. So they're saying that about 86% of Texas will see an increase in their flood policies. So really the motivation and kind of what you want to take into account is that anything you have in a flood zone, you really want to have this kind of attention given to it now. There's an opportunity to have all this corrected. So if we can get you to a lesser price point now, that's going to carry forward into next year. And just to give like a real example, over 5 years, the price that you're at now will basically have doubled. So if you're paying $20,000 now, and we're able to find a solution that gets you down to 10, then you're basically going to have 5 years before you're even back to your original price point. And so
let me ask you a question, DJ,
please.
Real quick, man. As far as like being grandfathered in, what if you have a property that's, whatever, if you're an AE X, doesn't really matter, right? You've got a flood policy and you're paying a certain amount, right? Are you going to be able to, because you said you can transfer them. What if you're not transferring them at all, right? Can you just kind of be grandfathered into that old pricing until, I guess, you sell the property, or how does that trigger work within FEMA and NFIP?
If you don't transfer the policy and there was like a grandfathering that was already in place, then you would lose that, unfortunately. Okay. So it's important to explore this scenario, and at least, we're talking to a lot of brokers around the country to do education and make sure that they're aware of these details. And we're having conversations ourselves with some of the flood carriers, and they're all telling us, work with your clients to get their price as low as possible now. So that way, whatever price point they're at come April of next year, that's going to be their new baseline before some of these percentage increases go into place. And so some of those scenarios where you can grandfather a policy now may not be the case next year. And FEMA has not released all the specifics either about what their new rating system will include. But you still will be able to transfer policies. So if something was already in place, you still will be able to assume that over to the new buyer. And that's a real positive, at least out of the whole scenario.
Absolutely, man. All right, so we got a couple questions here. Richard asks, what's an estimated time to obtain, it's a LOMA, you put FOMA in there. So give us a typical turnaround time. If somebody engaged you next week, is it just dependent on the size of the property or how complex it is? What's the typical turnaround time for you guys?
That's a great question, and thanks for asking, because I skipped right over that mentally. So depending on the type of scenario, it can vary anywhere from as fast as a week to possibly about 60 days. And we have expedited channels with FEMA directly. That's very unique to our group. And so we have a finite number of those spots. And once we submit a project, we typically have the approval back in a week. And so that becomes, very advantageous if we're working with a new acquisition, a refinance deadline, or a renewal date. And then there's a few scenarios that are a bit more complex that require us to send it through a little bit lengthier review process. And that's generally in the 45 to 60 day process.
Okay. All right. So John asks, what is your success rate, on your engagements? And then what scenario would prevent you from getting a LOMA?
Sure. So we qualify properties in over 50% of the ones that we review. And so then in those cases, when we go to the client and say, hey, we're confident that we can win this case, we can go to FEMA and have this changed, or even go to the insurance carrier rather and have their price reduced. Our win percentage is very much probably in the 97, 98% range. We rarely have a case fail just because we do thousands of these projects. And so we know with a pretty good level of confidence what the outcome will be. But if there's ever a chance that the success may not be as confident, then we'll tell the client. We'll say, hey, there's possibly a lesser chance that this could be approved, but we still think it's worth the effort. And so we're still willing to take on those projects. And again, if it fails, it's not anything to the client. It's really our own time that we invested, and the client doesn't see any kind of cost for that.
Okay.
Second part of his question.
Yeah, was, it was, what would prevent you from not getting a LOMA, right? I guess ultimately you guys you're doing a front end review. What's some red flags that you'd say? Because ultimately, once you've reviewed and you said, yeah, we can win, you got a 97% chance of winning, right? So what in that review process are you guys saying, man, we're just not going to be able to get this done?
So there's some properties that are just really low in comparison to the flood zone. And it could be from a variety of reasons. The flood zone could be really conservative in that area, meaning that they think that the flood elevation is perhaps higher than what, we would argue for that area of the country. It could be the way the property was built. It could be an older property that, years ago wasn't a flood zone. And so it was built at, a certain elevation. And then over time, that particular community deemed that, this is a more high risk area than we really thought in the past. And maybe it wasn't a flood zone 30 years ago, and now it's several feet higher above the property. And so in those cases, there's nothing that you can really do, unfortunately. But scenarios like that, where we start looking into the consulting side to see, can we do something on the cost side at least? So I think we get that question a lot, and I think it's where people are trying to filter what properties are worth looking at. And honestly, we have such a broad scope of solutions that if you're required to have flood insurance, it's worth our team taking a look. Okay.
And can you kind of explain a question that I'm curious about, right? Elevation certificates. You said it kind of lies in a bowl sometimes, right? And I know when so can you explain that concept to folks and how that plays into your review and ultimately your success with FEMA?
Yeah, so there's a lot of different data points that go into our analysis into FEMA. And, some of them have to do with the building elevation. Some of them have to do with some of the area elevations of the property and the different details with the flood zone itself. And so it's all these different factors that we're comparing against each other for us to be able to go to FEMA confidently and say, we have enough information to say these buildings should not be in the AE zone, that they should be excluded into an X. And so then if we don't have enough information to support that, then that's when the scenarios don't qualify, unfortunately.
Gotcha. All right. So Ajit asks, what if we close the deal early part of this year? Can we still engage you folks? And I'm just gonna go ahead and answer. I'm gonna say yes, absolutely, right? You know, if you can engage DJ at any point in the process of owning the deal, if he'll be successful, right? I think he goes through that review process, right?
Correct.
So Ajit, I definitely, and DJ, make sure that you drop your contact information in the chat box, if you would, folks. You know, and I just want to encourage everybody, we're getting kind of close to the Q&A part. You know, go ahead and ask DJ the questions. This is, at least for folks here in Texas, this is something that we live and invest through. I think Florida, I mean, obviously you guys are based out of Florida too. So there's a lot of folks there that are interested in that in other parts of the country. So I'm sure you guys do business.
I have one more question for you, DJ. It's probably important. Ultimately, you know, once you get a property out of the flood zone, right, and kind of get them that classification, do you typically recommend that the owners continue to still buy flood insurance, right? Because what you're doing essentially is you're not magically changing the elevation, right? You're just pointing out to insurance companies that this deal is less risky from a flood perspective than they may think otherwise, right? But there's still there's still risk there, right? And so what is y'all stance on that?
You know, it's important to understand that essentially the entire country is a flood zone of some level of risk. And so anything can flood. You know, we saw that during Harvey, of course. And so you really need to have a good conversation with your insurance broker and advisor. And then based on what your risk strategy is for your portfolio, some people fall a little more on the risk averse side, some are a little more conservative perhaps, and decide really what's best for, you know, the fiscal responsibility that you have for the property and your investors. And I would say base it a lot on what the history of the property is and use that information wisely. We're not insurance brokers, so legally we cannot make recommendations as to whether or not you should or shouldn't carry flood insurance. But I would tell you that more people than not do keep a flood policy even after we've had the flood zone changed.
It's cheaper. I mean, you know, you've saved a ton of cost, you know, from going from one level of insurance down to just a lower level, and you know, keep it for the peace of mind. That's, you know, and Ferris is asking this for we keep them in place, and we do that just for the peace of mind, folks. And I think that, you know, not to say that you'd be doing a disservice to your investors, but it's something as from a business standpoint that, you know, when you're talking $750 a building, you know, come on, you know, for that peace of mind, I would certainly put it in place. But that's just my personal opinion. So we got another question from Ajit. What if we're in the process of acquiring an asset that was recently flooded as part of a 500-year floodplain? Would that be moved into a 100-year floodplain?
Not necessarily. You know, like I said, the flood maps are only updated every 10 to 15 years. And so as those flood studies are done and the new maps are published, they do take into account some of that information, historic rainfall, areas where water has, you know, risen and created a flood action. So it's possible that, you know, if the flood map were to be redrawn in the next, you know, say 5 to 10 years, that area could then be brought into the 100-year area.
Okay. And do you anticipate, along with these changes that FEMA and NFIP are doing, that they're going to change that flood map, or has it already changed over the last couple of years?
Well, they're changing all the time. You know, different
parts
of the country.
So it's just that specific area, right? That might be updated in another 10 or 15 years.
Yeah, if you could think of Harris County, right? It's a huge county. Think of like a big checkerboard, and there's different little squares within the flood map that make up individual flood panels, and certain panels may update on different timelines. Gotcha.
Well, this has been extremely informative, DJ. I really appreciate it, man. You know, is there anything else that you think our listeners, our viewers, are gonna want to hear, or any additional services that you guys provide beyond the consulting and, you know, kind of working with FEMA that you know everybody would like to hear about?
No, and just tell everyone to, you know, stay open-minded. when it comes to a property in a flood zone, do your due diligence, do your research. And if you like the deal, we're happy to have a conversation to see if we can help, add some additional value and create some additional NOI. And, look forward to, continuing to get to know people in this network and educate and help increasing returns for investors.
Awesome. Well, thank you very much, DJ. I know you put your contact information into the chat, so if anyone's looking to reach out to DJ, please go there. Appreciate you taking the time, DJ. I know you're traveling and everything, so really appreciate it. Thank you very much. So I guess with that said, so for those of, no problem. So for those that haven't, DJ, I'd like you to stick around since I haven't even announced this, right? So for those that have been to one of our previous webinars, right, we typically do breakout rooms at the very end, right, which is what we're about to transition to. Multifamily is all about your network, right, John? It's about who you know, it's about the people you meet and building those relationships. And so what better than to kind of facilitate that, right? So we're all of us on the kind of putting together our big proponents of networking. And so what we started doing is really breaking out the group into these little breakout rooms. And, we'll break it into groups of about 5, 6 people, right? Where you can have a conversation, right? Get to know someone. Maybe you'll have one of the hosts, maybe you have DJ, maybe you'll have someone else, right? Have a conversation, learn about that person. If you're stuck on you don't know what you need to talk about, share about what you do and what you did this weekend, right? We're all fun people. We're all normal people. And, that's how you meet people, right? I met my partner, Ben, at the meetup. I mean, this is possible. A lot happens. So it's very powerful stuff. So with that said, we'll go ahead and kick it off into a breakout for about 10 minutes, and then we will bring everyone back in, and then we'll just leave the channel open for everybody. So with that said, thank you all very much. And I'm going to go ahead and get the
one thing. And Ginny, yeah, I'm sure John will hang around for a couple extra minutes, but DJ, can you just for the benefit of the recording, can you give everybody your email address real quick?
Yes, you can reach me at info@nationalfloodexperts.com.
All right, buddy. And DJ, once again, we wanted to thank you. This information is invaluable to folks that are looking at deals in these types of areas. And you personally, we can attest that your firm has done an incredible job for us. So thank you. And look forward to seeing you next week in Miami, my friend. So
yeah, see you then.
all right.
Thank you.
Thanks, everybody.